Hello and welcome to BCR. Let's get your trading day started with the following financial news and market headlines.
Since the middle of last week, with the dollar index continuing to easily surpass old resistance levels for several days, the strength of the dollar is evident in a series of currency pairs. Last week, the rise in this index was mainly driven by the increase in U.S. Treasury yields and a favorable inflationary environment for the dollar. In addition, comments from Federal Reserve officials indicating a reduced likelihood of interest rate cuts this year increased hawkish bets, which further boosted the currency. Furthermore, after the European Central Bank meeting raised expectations of a rate cut in June, coupled with Iran's threat of short-term attacks on Israel, the US dollar, as a safe haven currency, accelerated its rise. The gold price continued its strong bullish trajectory of the past 3 weeks, climbing to a new historical high of $2,431.50 on Friday. Investors remain concerned about geopolitical risks stemming from the Middle East conflict, which in turn is a key factor driving the sustained positive momentum. Expectations of interest rate cuts by major central banks this year have provided additional support for the non-yielding yellow metal. Furthermore, the influx of investors into safe haven assets due to geopolitical risks has significantly strengthened market trends, pushing gold price to a historical high of $2,431.50 per ounce, before retreating to the $2,333.80 level due to overall strength in the USD. Last week, due to the tense geopolitical situation in the Middle East, there was an increase of about 1.66%. However, this week, the overall increase trend has declined due to the pessimistic world oil demand growth forecast by the IEA and concerns about interest rate cuts in the United States. Concerns about the possibility of war initiated by Iran, the third largest oil-producing country in OPEC, kept prices near a one-week high. The market's main focus is on whether Iran will retaliate against Israel, and concerns about supply disruptions due to events in the Middle East have provided support. The ongoing threat from Iran to close the Suez Canal continues to pose the biggest risk premium to the supply chain.
We hope you enjoyed today's market outlook. If you have any questions or topics you'd like us to cover, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news